Is the Howard Hughes Corporation up for sale? In this video, we're going to showcase a buyer who put a huge offer on the table. Do me a huge favor though, on your way in, shoot this video a like, and if you haven't already, please subscribe to the channel. Let's jump right into it. I'm going to share my screen. We're going to go over to the CRE Daily. Bill Ackman to buy majority of Howard Hughes in $1.5 billion deal. Bill Ackman's Pershing Square Capital proposed a $1.5 billion deal to acquire a majority stake in Howard Hughes, aiming to reshape the company. Key takeaways here. Bill Ackman's Pershing Square Capital is offering $85 per share for Howard Hughes Holdings, valuing the company at $1.5 billion. The deal would increase Pershing's stake in Howard Hughes from 38% to as much as 69% with a $500 million share repurchase program. Ackman criticized the company's performance and proposed a merger that would make Pershing Square the largest owner while keeping leadership. Howard Hughes specializes in master plan communities, as we know for those that live here in Summerlin, and owns substantial commercial real estate across the U.S. I'm going to skip down here the details. We already went over those. Ackman's offer comes after years of dissatisfaction with Howard Hughes' stock performance, which has lagged since its peak in 2014. The company, which specializes in master plan communities, has seen its stock fluctuate significantly from a high of $151.61 per share in 2014 to as low as $38.20 in 2020. Ackman, who has invested in Howard Hughes since 2010, pointed to the stock's extremely disappointing performance, noting that Pershing Square's 14-year investment has only returned 2.2% annually despite significant business growth. Not too good there. I know plenty of other investments that would have done a lot better. The proposed $85 per share offer is nearly 20% higher than Howard Hughes' closing price of $71.78 on January 10th. If accepted, the offer would also allow Howard Hughes shareholders to remain part of a new combined company with Ackman's firm owning the largest stake. All right, so what's next? Ackman's vision for Howard Hughes is to turn it into a diversified holding company, with Howard Hughes acquiring operating businesses and assets in the private market. He likened his plan to Warren Buffett's Berkshire Hathaway, aiming to build a conglomerate that makes controlling investments in diverse sectors. However, Ackman emphasized there would be no immediate changes to Howard Hughes' leadership or operation. CEO David O'Reilly and the senior management team would remain in place, and Ackman's goal for the company to continue executing its long-term strategy of development communities. Howard Hughes Holdings currently controls a portfolio of significant real estate assets, including several large communities in Texas, Maryland, and other states, Nevada being one of them. The company owns more than 6.9 million square feet of office space and thousands of residential units, making it one of the largest public CRE companies in the country. So why this matters? Ackman's offer could catalyze Howard Hughes' much-needed transformation, but it remains to be seen whether Howard Hughes shareholders and the board will embrace his vision. This deal, valued at $1.5 billion, Ackman's proposal could reshape Howard Hughes into a more diversified and growth-oriented company, positioning it for long-term success. If successful, this deal could set a new precedent for how publicly traded real estate companies are managed and transformed in the coming years. What do you guys think? Is this a big deal? Not a big deal? If it goes through, do you think things are actually going to change? Do you think that maybe things will accelerate here in Summerlin West, Summerlin South, as far as the development? Give me your thoughts in the comments. Do me a huge favor on your way out. Shoot this video a like. And if you haven't already, please subscribe to the channel, and I'll catch you on the next one.